How's it, man? Can you hear me? Seems like you're the only one here. People sleeping or what?
Maybe they are sleeping. Yeah.
No, All right, I'll go on. If they join later, it's okay. But they can always rewatch the video. So how's it going, man?
I'm good, sir. And how are you?
Nah, I'm good. Hey, you're fighting, my brother.
Sorry, man. Sorry, man. Hey, I'm sorry, man. Hey, I'm really sorry, sir.
No problem, man. Okay, so in today's session, what I want to talk about is what most people struggle with, and that's level counts, right? I'm sure you also asked about level counts when I mentioned the boot camp. Have you been struggling with that?
Yes, yes.
Okay, so basically, level counting, né, um, shouldn't be much of a problem, especially if you trying to figure out what to look for in the, pardon?
No, no. Take on, sir.
Oh, okay. So basically, what I'm going to start explaining is a very simple concept, which I'm sure you know about. I mean, this is basic. I'm not going to go deep into market structure, as I believe that's something you should know now. But as we go, if you have any questions, you can definitely ask. All right. So the first thing that I'm going to talk
Okay.
about, I think you can mute yourself for now, and then if there's a question or need
Yeah.
to talk, you can unmute. Okay, so the first thing that I want to talk about is areas where one has to start counting levels. Because one thing or one mistake people do is they just want to go to any chart, and when they do that, they just want to start counting levels all over the place. Now it becomes a problem for you to actually be on point with your entries because remember, levels will not always be 100% all the time. All right. So, meaning when you open up any chart, it will not always be one, two, three, peak formation, one, two, three. So, what I'm going to show you now is areas where you should look uh, to start counting your levels. Right. So when we talk about order blocks, we're going to talk about supply areas and demand areas and the structures that we look for. The first structure I'm going to talk about is a reversal point. Right. Now, a reversal structure, in this case, I like using cell examples, but remember, you can always apply this on the buy side as well. It's not always limited to selling, right? And that is us getting a rally, right? Base, drop, right? This is when the market is in an up phase, right? Reaches a supply area and reverses, right? So essentially, this area right here then becomes our sell zone. Right. So what we want to see, what we'd love to see in this case, would want to see the market slowly make its way back to that order block, and then we can reverse order block or supply area. All right. So this is for reversals. So basically, this is something that you can start looking for when you're anticipating your level three reversals, right? Be it on the buy side or sell side, right? And then after this, what we look for after we have identified such, meaning after we have identified the reversal point and we want to join in on the trend, right? This is what we will then look for. We want to see a drop, base, drop, all right? This base area then becomes our sell zone, right? So same thing that would want to see here is would love to see the market slowly make its way back to that order block and then we reverse, right? So there's two things that we've looked at here, right? This is a reversal point and then this is a continuation, right? This is a continuation because a drop, base drop basically is already when we have confirmed, right, a supply uh, zone that is moving price. right? So this is very simple. When we are anticipating such, let me just remove this. When we are anticipating such, right? Let's say we have identified a rally, a base, and a drop, right? What we want to do is when we know that we are waiting for this supply area right here, right? This is when we can now start looking to see if there's any peak down here, right? If there's any peak down here, which essentially can be a level three, right? So what will happen most of the time is when price reacts or reverses from a supply zone, this is when we'll see one, two, three, all right? So this is when we have a peak formation down here, and then the cycle restarts, right? So we've got one, two, three into the supply area, and then would look to sell, right? So in reversal points, this is when we want to catch peaks and identify level one, right? In reversal point, this is when we want to catch peaks and identify level one. This will help you count your levels better. So the only time you want to be interested in counting levels should be when you identify such a structure, right? Now, such a structure can be seen right here. This is the monthly time frame, right? I'm taking this from the monthly time frame because it's less noisy. But remember, whatever you see in the monthly time frame can be applied in any other time frame. All right. So as you can see what happened here, just by looking at what we have, we've got this rally, right? We have this rally, base, drop, right? And as I said, this essentially then becomes our sell zone, right? This becomes our sell zone. So as you can see, as price pushed down, we can identify this one into a consolidation, that's level one, right? And then we can see another level of drop, that's level two, and then a slight pullback, and then the last push, right? And as you can see, as the market made its way back to the supply area, we can also identify level one, level two push, and level three push. Are we together on that one? Do you have any questions so far?
Yeah, no, we are together. We are together.
All right. So that's basically what will make counting levels easier for you. Now, just by looking at reversal examples, I'm going to take you to some charts, right? And all we are going to look for in this case, we are going to look for reversal points, right? So we're going to look for reversal points or continuation points, right? So let me just get back to the clean chart so that I can also explain the continuation. So this is what it is. Once we've identified a reversal point, in this case, a rally, base, drop, right? And market has made its way back to that area and the market has dropped. Essentially, what we have right here, right, um, puts you on the winning side, right? More because what you can identify here is we have a supply area. Price has already reacted to the supply area, right? In this case, this would come in as level one, right? And would want usually want to see such movements be the reason or why structures are broken, right? So if you have identified level one, remember catching peaks is something that comes with experience as well, but there's not really a reason why you should look to catch level three all the time, right? Because remember, as the week goes or the weeks and months go, it will not always be level three all the time. Sometimes the levels are playing out in the higher time frames, right? But what you should train your eye to see these supply areas, right? So that you can make better decisions. So what will usually happen is when we have this drop right here, remember we've already seen this as level one, we'll have something like this, right? This is what usually happens most of the times where now we've got a continuation pattern. Remember I spoke about two uh, structures that we look for. That's the reversal and the continuation. So in this case, when we have such, this then becomes our supply zone, right? This then becomes our base area. Remember, drop, base, drop, meaning what we want to see, is we would want to see the market slowly make its way up, right? Tap into the area and drop, right? So as easy as it seems now, when we now take it to the BTMM side of things, right? Something like this would happen. Let's say we have a day of drop, right? So one day of drop, and let's assume that this was on a Tuesday. Right? Let's just say this was on a Tuesday, all right? Let me just move that. So let's say the market has dropped, it's given us level one, right? And the market then pulls back, right? So most of the time, this is what you will see where the market does something like this, right? And during Asian session, it will drop, right? Remember, we don't really look for trades during Asian session. But what you should keep at the back of your mind is our supply zone is here, right? This is our sell zone. This is the area where we want to look for a sell. So in this case, what will happen most of the times is at the end of Asian, this is when the dealer will then set that low, right? Make its way up. And most of the times, that is when we have the three pushes up, right, into an area. So the three pushes, the level count, always, you should always make sure that you understand the structure, right? That is why I'll always open up a chart on a clean chart so that you see it with clarity before you even think of counting your levels, right? So I hope you together on that one. Any questions so far?
Yeah, so far, so good. So far, so good.
All right. So as I said, what I'm going to do now is we're going to take it to the BCMM side, and I want us to focus on the H4. Right? The reason why I'm saying H4 is, I don't really think, I mean, you can apply this on anything, but I'm not really much of a swing trader that much, right? I'm not really much of a swing trader, especially if you can understand this, you can definitely ramp up your lots um, as you go. Right. So remember, that is how the markets will always go. So here's an example. I'm just going to start from here, right? So we can see what is happening, right? From this area right here, right? We can all identify that this is a peak formation. Why are we saying this is a peak formation? This is market. Market gave us a rally base and gave us a drop, which made this area a supply zone, right? Now, let us look at how market moved away when we had this rally base drop. We can identify level one into a consolidation. We can see another level of drop into a consolidation. We can't really call this a level as it's very small, right? And then we can identify another level, giving us level three. And you can see how price then pulled away from that area. Essentially, price pulled away from that area also because on the left, we also had a demand area. So on the demand side of things, it's drop, base, rally, meaning this then becomes our buy zone. And as you can see, as price made its way down here, price was then pushed into this buy zone and moved away. Right. Now, from price moving away, what can we see right here? We can see level one, not really a clean level, but we see the consolidation, right? We see level two, you can see a slight consolidation or pullback right there, and then level three, right? This level three, for someone, right, who's just learning BCMM, somebody would have seen this push and this slight reversal here and thought, you know what? This is now level three. I'm gonna go short. But look, price then gave us another push to the upside. Is there and there is a reason why price pushed to that area? Can you give me that reason?
Yes, because of the supply area.
Yes, yes, because of the cell zone right here. So you see
Sell
that now
zone.
yes, now counting levels becomes easier when you pay attention to the structure, right? It becomes very easy for you when you pay attention to the structure. All right, so let's go on. Let me just change the color. So as you can see, price then came back to the supply zone. And if we can zoom in right there, you will be able to see that we had an M formation. All right, let me just clear this out and go back right here, right? As you can see, first leg, second leg. on that area, right? So, what's happening? Okay, there. Right. So if we look at the H4, remember when we're counting our levels, 1 week of drop is seen as a level, right? So 1 week of drop can be seen as one level, right? So to make it simple, let me just open up another chart in the monthly. So this is basically what I'm saying. In the H4 time frame, right? If you identify a level, right? Let me change the color. If you identify a level of drop, right? That is basically one level, right? This is the H4, right? But if you turn down to the H1 time frame, this one level is essentially three smaller levels in your H1. One, two, three, right? And then obviously market pulls back, right? But in the H4, it is all seen as one level, right? And then we'll have a pullback. That pullback usually is when we get one, two levels, another peak. This is when we can anticipate a peak reset, and then we continue the cycle. So that'll be one, two, three, right? And then pulls back again. So all we have here is two levels in the H4, right? But if you look at the H1, it will be one, two, three, peak formation, one, two levels up, reset, and then we restart. Right, so do you understand that? Three levels in the H1 is one level in the H4. Are we together on that one?
Yes, I were together.
All right. So let's go back then since we are on the same page so that you don't lose me on that one. So basically, this is what happens. Remember, a level has to be a long sustained run, right? A level count has to be a long sustained run. What do I mean by that? Meaning something like this is regarded as a level, right? What is happening here? Remember when price then moved away from the supply level, we know that we are in level three. We saw some slight moves. I mean, we can't really regard these as levels. There was not really much that happened that week, right? So you will have weeks like that where such happens, right? You will have a lot of weeks like where, this happens. But what's important all the time is the supply area. Always keep in mind of the structure, right? So for some people, someone who's still learning this type of price action right here, right? Or the only thing it will do to you, you'll find yourself trying to enter there, right? But all that's being created here is liquidity, right? And then such moves, right? As you can see, this is the H4. So nothing really happened. Price went down, right? And then closed the week at that area, right? So what will happen most of the times when there is consolidation, right, or not really much of movement is the same price point that the dealer opened on the beginning of the week is usually the same price point the dealer will close. So do you see that that's exactly what happened here? Nothing really changed for this week. Right? That is why you need to be selective. Right. But all this is happening because of the liquidity that was being creating and all the stop losses that are up here you can see, right? For support and resistant traders, they'll be drawing lines and say, okay, no, this is I don't know, there's reactions there. They will draw lines here. So do you understand that there's a bunch of stop losses all over? People will just have stops all over. It is not clear. So that is why we need to be selective. But do you see what happened here? Price just came back to the supply zone, right? And how will this make sense? If we draw out this area and move to the daily, we'll see how. Uh, so you see in the daily, it was, sorry about that. Let me zoom in. In the daily, what was happening here was very simple. We had a rally, base, drop. So this was our supply zone. So do you see that all price did, or what price did right here was price came back to the area, to the supply zone first leg, and gave us a second leg, with the second leg being lower than the first leg. right? So you need to understand this from your higher time frames as well with clarity, because if you just went to your H4, it was going to confuse you, right? You're going to find yourself making a lot of bad decisions here, not knowing that the real move was here. So as you can see, when we were given that second leg, that is when we then identified a long sustained run of price. We're together on that one.
Yes, yes, we are together.
Okay. So remember, of course, you've watched the course since you bought the course, and we know the types of setups that we wait for when we have moved away from the peak, right? So remember, when we see a 1350 crossover, what is the next trade out that we are anticipating?
Safety trade, 80-50.
ID50, right? So we are still in the H4, right? So now I'm going to go back to structure. So as you can see, when price was moving down, remember when I'm talking about order blocks, I'm talking about areas. Remember, you need to be selective as well. I'm talking about areas like this. Do you see how this minor drop, base drop, right? What makes an order block of high quality is the momentum that leaves that area. So essentially, our supply zone is here, right? Do you see this candle? This candle says a lot about that certain area. So if we can go to a time frame like your H1 on that drop base drop, you see what we have right here?
Oh, yes, yes,
Yes.
yes.
So when we talk about structure, that is a drop, base, drop, making this our supply area that we cannot join in. Right. So now this then becomes a factor of confluence for you. Right. Remember, what do we see? We've already confirmed the peak from the higher time frame. We've already seen this from the daily that we have moved away, and we have confirmed that we have 1 week of drop, right? So looking at the H4 as you are scanning through your pairs, it will make it easy for you to also anticipate of the next week's moves. Are we together?
Mm. Yes, yes.
So it becomes easy for you to anticipate the next week's moves. Why are these uh, structures important to us? Is it will also allow you to avoid traps. What do I mean by traps? For somebody who's not really uh, who doesn't really have much knowledge on this, they would have tried selling here, right? They would have tried selling there. And if we go to the H1, probably there was a setup there that probably makes sense. Look, in the H1, this was actually an ID50. And as you can see, it actually gave you first leg, second leg. But later on came and did something like this, right? So what usually happens, and this is something that you need to keep at the back of your head, right? When it comes to order blocks, it will not always be like this all the time, where the price gives us a reversal point, drops, right? What will usually happen is, knowing the nature of price pushes up like this, reaches a point, drops, right? And it will do something like this and drop, right? Our reversal point remains this one. This is our sell zone, right? But remember, liquidity also has to be created, meaning they have to trap traders, induce traders. That's the whole idea behind inducing, right? So what most people will do is when they see such, right? There's a bunch, people are selling, right? Remember, retail trading strategies will still be validated no matter what. So there is a pool of stop losses at this area. There's a pool of stops, right? And this area remains untouched at this point. It hasn't been touched. What will happen is the market will do something like this, right? Act as if it's struggling at that area to validate these guys, right? And also to bring in new traders who are looking to sell. Where are they putting their stop losses? Just above here. And then we'll have something like this. And then we continue dropping. So can also apply on the drop base drop, where we've got a drop, right? Base drop. And then this becomes our area of interest, but the dealer will do something like this, can even do something like this. and just consolidate there. What is happening? These guys are getting validated, right? Supporting resistant traders. They've drawn their lines and the pool of stop losses are here, right? And what will happen is the market will come hit and drop, right? So that is exactly the same thing that we can identify on this H1 time frame, right? If you understand this, you are not going to fall for this, right? You are not going to fall for this. And this is where patience comes in as well, because as you can see, this was on a Monday, Tuesday, no trade at all. And then we had a trade on a Wednesday, which is known as the reversal day, midweek reversal, right? And that went and hit where it hit our sell zone, drop base drop, and also hit that 50 EMA in the H4 time frame. So you understand that as you focus on the H4, it will also allow you to risk less. I mean, here you would have been risking 14 pips, and this went all the way down, although it dropped the next week to 100 pips. So this will make sense. If you're a one lot trader, 14 pips, you're risking $140, aiming for $1,000. That is good risk to reward. Right. So do you see that when counting your levels, you don't have to try to count your levels on everything, right? On everything. You need to be selective, meaning, especially over the weekends. That is when you get to choose, what pairs look good. Don't try to force the counting of levels on everything, right? So for somebody looking at this, they would have said, Ish, but I tried selling here, right? It is not a point because this supply area is still there, still intact, right? All you have to keep in mind is you have to look at the bigger picture as well, because remember, this is the daily time frame, and we know what the dealers do. False move month beginning. So since this is the daily, false move month beginning, they have to take it the other direction. And in this case, if you understand structure, you will know that price is coming back to our supply. And then trap is set, then we have the high of the month, right? So you see that just by understanding that, it's easier for you to now start seeing these levels now.
Yes, yes, yes. I see. I see. I see.
Aha. So what I do to keep it very simple, especially when you're looking for setups, right? But I'll always advise that you play around with the higher time frames first, because the higher time frames will always show you what is happening on the bigger scale, right? Right. You need to understand what's happening. You need to look for something like these. If you can see this in the monthly, then already you know where the market is heading, right? Before you do anything, you already know the market has just moved on the weekly, right? Above the 200 EMA, which is one of our setups since we had a 50-200 crossover. So you would know that for a while, that pair will be dropping, right? So it makes it easy for you now to be able to identify the right structures that you look for in your shorter time frames. In this case, intra-week, we look at the H4, right? So I keep my filtering very easy. All right, so that's what I'm going to do right now. We are just going to, I actually have a trade on Euro USD right now, as you can see, and I'm going to explain the reason why I am in that trade, right? So as you can see, if you look at the weekly time frame, there's a huge trap that we can identify. Price is moving down, right? But also keep in mind that price has also interacted with the 50 right there. All right. So we'll keep that at the back of our heads. All right. If you go to the daily, this is what we can see, right? After this trap that we had right here, we can see that price gave us a drop, right? We can identify level one from that area, level one into a consolidation, giving us a pullback. And then we also can see level two drop. So what is basically happening here, as you can see, is we had a drop-based drop, not really a clean area, but of course, with what we can see here, as you can see, we had this peak formation above the 50 and 200 EMA, right, which makes it a very strong one. Then the H4, then we had a clean week of drop, which was last week, right? So all that happened here is when price gave us this move, obviously crossed over the 1350. This is essentially our first pullback to the 50 EMA. So uh, I'm sure you know about this. What do you think is the reason why I am in a sell here?
It's 80-50 or it's 50-50 pounds now, if I'm not
Yeah, you
mistaken.
can call it ID 50-50, but yeah, you understand it, right? So I didn't catch I couldn't catch the actual peak, right? But if we go to the H1, this is what we saw. So I saw that okay, the dealer has created a peak formation. Essentially, this is Monday, Tuesday. So we had the peak on Tuesday. Tomorrow is Thursday, right? So we can already tell that this is our potential unless things change. Remember, the market can always turn at any time, right? This is our potential high of the week. So when you are trading now, because of being patient, you already know that we have a high of the week in place, and you know that the dealer's objective is to trade away from the peak, which is what he has been doing. He validated that today, right? By giving us that high of the day, right? But also, I want you to see where did the dealer go to? We had a rally base drop. So the dealer went back to the supply area. And as you can see, that is exactly where he went and tapped. And it was a trap because as you can see, it just went into that area and the candle became bearish at the same time. So when we go to the M15, look at the trap. Do you see the trap that happened right there? It was just a pin, right? For some people, though, this will catch them by surprise because they have not really looked at the structure. The structure says this is our supply, right? So couldn't catch it there, right? But this being the high of the day, we had a 1350 crossover right there, which confirmed the lock of this peak, right? So all that I waited for, as you can see, was a 50-50 bounce, as you can call it. Since this is the M15 time frame, we can call it ID50 right there. And as you can see, we entered the trade, right? So obviously, to for now, I'm not really gonna go into M1 refining yet, as we perfect the higher time frames. But in this case, since that was the leg, right? Look at what we had right here. We had a drop. Oh, sorry about that. We had a drop, sorry, drop, base, drop, meaning this was our supply zone, right? So as you can see, I waited for that. Price went back, gave us a pin bar above the 200 EMA in the M1, and that is where I entered. So my stop already, I only moved it there because I mean there's room. There's room and I'm avoiding spreads because spreads, do you know how brokers are? Around 12 our time, the spreads are widened, right? And it can end up messing up with your trade. So in this case, the stop loss here, right? Just by understanding the higher time frame, stop loss was only supposed to be above this area, which makes it, this give it some room. We're gonna put it at 10 pips, right? So 10 pips, meaning if you are a one lot trader, right, you'd be risking $100, right? You'd be
Yes.
risking $100 on that. But our target on this, since we already see this, target doesn't have to be too far. I mean, we are intraday trading, or rather, we're not really looking to hold, but we know price can make its way down here, right, to the demand. So that would mean you were risking 10 pips, right, targeting over 80 pips. So that makes sense. You risked $100 to make $800. In the long run, right, that will keep you profitable. I'm not saying go and use one lot, but you have to calculate the lot sizing according to your account size, of course. But I'm just showing you how uh you can minimize your risk by understanding this. So do you see that? This is a clean trade, and it can make its way down. and we know what is happening where in the higher time frames. But we are keeping in mind, right, that remember in the weekly, market touched the 50 EMA. That is the reason why I am only interested in taking my profits down here, right? Does this mean it's going to turn? We don't know, right? Even if it does, we've made profit, right? We'll come back next week and see what the market is showing us. But do you see how easy counting levels can be? You don't have to become a master of drawing boxes all over your charts. No, right? So remember, in this case, I'm just targeting this very minor area, right, down here. And we are looking at 80 pips, right? But my main
Mm.
target, actually, I want to see this push all the way down to this 800 EMA in our daily time frame. Now this will now turn to be a swing trade, and we are targeting 300 pips. So that makes a lot of sense, man. If you're going to risk 10 pips for 300 pips, meaning if you're a one lot trader, you are risking $100 to make $3,000. That makes sense. And that is the reason why I'm always saying there is absolutely no reason for you to try and trade 600 times in a week. Right? It's all about quality trades. And when I say quality trades, that means we are not all over the place, right? We are not all over the place. We are not trying to trade everything. We are not in a rush, right? There is absolutely nothing uh, to be in a rush about. It's all about um, seeing these setups with clarity. So another example, as we're about to run out of time here, uh, is how last week started off, right? Because obviously, because of everything happening now with the war, here's a peak formation, right? Here's a day of drop, right? So level one into a
Mhm.
consolidation, right? Level two, and this was a Friday, right? So as you can see, as the market gave us the high of the day and gave us the low, price then pulled back and closed off the week. This was on a Friday. But now, when the market opened, right, we had a gap. As you can see, price just gapped down here. This is when sometimes you won't see the order blocks with clarity as how we would see it if the market was just functioning well. But this was actually because of the gap, right? It becomes the same thing as remember I spoke about momentum. Momentum then tells us that at that level there is a high amount of orders by the smart money. So this was the supply zone. So do you see what happened? During Asian, price then moved down, right? For some people who could not wait for a setup or ignored that there's a supply zone, they were trying to probably go short here. And guess what? Yeah, they probably got their stop loss
Mm.
hit because they were probably going to have their stop losses way here. But all that's happening is price had to come back and fill in these orders at the supply. And another factor of confluence is we also had the 50 EMA in sight. And look at that. We had a nice trade down, right? Next day, trap above. If you traded that, you were in. It came back, didn't break. Remember trading away from the peak, another trap above, and ended the week. See how beautiful that was. Very, very,
Yes.
very beautiful trade. So I'm not sure it was a GBP because we actually took this trade. I don't know if it's GBP or GBP CAD or GBP AU. Oh, it's GBP AUD. Actually, if you look at I think it's the recent YouTube video I posted, I actually explained the entry. We took the trade somewhere here, right? If you check the one I posted yesterday, we took the trade somewhere here and took our profits all the way down here. And as you can see, this continued going down and it can also continue moving to the downside.